Hi, you have tuned into Kotak Securities Weekly Fundamental Podcast. I am Rini Mehta. Stock markets remained erratic last week in the absence of a significant mood event, with a furious struggle raging between bulls and bears. The Indian equity market, that is Nifty index, gained 2.8% as investors hoped for limited downsides to growth in the current macro environment. Fourth quarter Nifty earnings increased 24% year on year and were 2.5% below KI estimates. On the economy front, fourth quarter real GDP growth slowed to 4.1% as against 5.4% in third quarter. Then April 2022 GST collections were at 1.4 trillion rupees. Then May exports increased 15% year on year and imports increased 56% year on year. In another economy news, RBI has projected first quarter inflation at 6.3%, which is clearly now subject to modification in the upcoming June monetary policy meet. RBI has already hiked repo rates by 40 basis points in a surprise announcement and also indicated that they intend to get the repo rate back to pre-COVID levels. This signals that another hike of about 75 basis points is already on cards. Coming back to the markets, Sensex ended with gain of 2.2% last week, while the Nifty reported gains of 2% during the week. Mid-cap index underperformed with the gain of 1.7% and small-cap index outperformed with a gain of 3.5%. Most of the sectoral indices ended in green except for Bank Nifty, Pharma and Power. Guys, in the midst of global chaos and conflicts, if there is one thing that is uniting the countries, it is inflationary pressures and following interest rate hikes. Last week, central banks of various countries resorted to an increase in benchmark interest rates. In US, investors will be looking ahead to the release of US jobs data for May. Meanwhile, the OPEC plus countries agreed to raise the output in July and August by about 648,000 barrels per day. Russia's onslaught in Ukraine is also front and center, as well as the recent European Union announcement of a partial ban on Russian oil imports. Now, if we see foreign investors' interest, month till date, FIIs are net sellers to the tune of rupees 2,382 crores, mainly on account of rising risk of inflation and elevated crude oil prices. We expect FPI flows to remain volatile in the emerging markets on account of rising geopolitical risk, rising inflation, tightening of monetary policy, etc. Finally, moving on to the top stock picks. Our pick of the week is United Spirits with ad rating. United Spirits reported 5% volume growth year on year and 9% value growth year on year, in line with expectations. The divestment or franchising of select popular brands sets the stage for a company to accelerate its premiumization journey to deliver sustained double-digit growth with mid to high teen EBITDA margin in the medium term. Our fair value of rupees 940 implies about 44 times June 24 price to earnings and rupees 90 per share for the IPL franchise. Another pick for you is Jubilant FoodWorks. Jubilant's fourth quarter print was a tad soft on expected lines, whereas guidance of 250 new Domino's stores in FY23 was ahead of expectations. Popeye's scale-up would continue, whereas Hong's kitchen expansion takes a backseat amidst leadership transition. Jubilant FoodWorks has selected Samir Khetarpal from Amazon India, ex-McKinsey as well, to be the next MD and CEO starting September this year. Mr. Khetarpal's 25 years of diverse experience and track record of building businesses and driving operational transformation hold him in good stead. Overall, an exciting appointment for a challenging job. Lastly, you can buy Tech Mahindra. We hosted Tech Mahindra management for investor meetings recently, and here are some takeaways for you. First is no impact yet of macro events on the business. Then business portfolio is resilient. There is margin pressure in the near term, but will exit FY23 with strong EBIT margin of 14.5 to 15%. Then interventions have helped contain attrition. Supply side is still challenging. And lastly, focus is on organic growth in FY23. Stock is trading at inexpensive valuations, so it looks good. Looks like a good buy. So guys, that's all for today. See you again next week. Signing off.